Ted Seifried joining us here from Zaner Ag. And Ted, looking at this grain trade here, back and forth on the day. What do you make of this? Let's get to the corn. I'm going to put the corn chart up here so we can both see that together and see what the market's doing here at this hour. Anything stick out in the corn trade? Down a little bit?
Yeah, down a little bit. You know, it's fairly quiet. We had export sales today. They weren't terrible, Mark, but they weren't great either. You know, they were within the range. For corn, they were at the low end of the range. For soybeans, they were better than what we've seen in previous weeks, but we knew about 500,000 metric tons of that from daily flash sales. Half of that 500,000 metric tons was on new crop. And there was really hardly any sales beyond that 254,000 metric tons that we saw in the flash sales for new crop. There were a couple bushels extra on top of that, but nothing much. So it's okay, but it wasn't a bullish spark that we kind of needed. We're sort of at a time frame here where we've got a lack of like really friendly news. I know some of us are talking about planting delays already, but it is very early for that. And I think more than not, the subsequent moisture is really very helpful. Yeah. And then, you know, there's really no major concern with South American weather right now. Now, there are stories that are sort of flooding social media about Argentina's crop and leaf hoppers and disease and a sharp reduction in their estimates. The Rosario Grain cut their estimate by 7 million metric tons, and the USDA attaché followed suit by about 4.5 million metric tons. So there is some maybe positive undercurrents kind of developing from the Argentinian situation. But for the most part, we're just looking for a weather spark or something to get us going, and it just hasn't seemed to find that yet.
Yeah.
So we are slowly coming down.
You know, you make a good point there. At April 18th, not May 18th. I guess we get to May 18th, and we're still looking at the kind of some delays that you're talking about. Then you have something to talk about. Corn again down 2 cents nearby May. December down 4. Let's check I'm going to move over here to the soybean chart and down even more. May down 8 3/4. November new crop 7.5 lower, and even with a better soybean number, almost 60% above a week ago and over 60% from the 4-week average, yet still lower in beans. That South America flavor?
Yeah, well, again, I mean, we knew about a good portion of those sales coming in. And so our expectations were that it would be even better bean number than it was. And so, yeah, I don't know. We also know that this is the very tail end of our export window for soybeans. So we'll take as much as we can get right now. And this wasn't enough to really get excited about, at least in my opinion. And in the meantime, yeah, you've got the South American harvest wrapping up on soybeans. It is the time frame for them to start to take over. Their basis is actually not terrible. So, you know, you think that maybe beans can find some footing in here at some point. But the problem is that we've got big carryovers in corn and beans. So don't worry about South America and what their pricing is. Well, that has to translate into bigger exports for us. And until that happens, it's really tough to get excited about it.
And you know that stocks report showed us that we know where the soybeans and the corn are located here. They're still in a lot of on the farm storage, and the trade knows that as well. Ted Seifried joining us here. Wheat is higher. May up 3.5. The new crop to July up 3 3/4. Let's check the other two exchanges. Get back to you there. May. Kansas City up 7 3/4, and July up the same 7 3/4, nearly 577 on the July contract. And then Minneapolis looking at a 9 3/4 advance on the May over 643, and July up 8.5. What do you make of that advance in the wheat trade here, Ted?
Yeah, you know, after 3 pretty solid down days for wheat, yesterday being the biggest, wheat is trying to find some footing. I think it got a little bit oversold in the near term. It's still trying to operate that positive chart, you know, the key reversal that we had on March 11th. But we've broken out below this shallow upward trend line that we've had. So that's at risk now, Mark. I feel like we want to go back and test those lows. So today I think it's just letting the dust settle, sort of a relief day for wheat and otherwise quiet trade. But you really don't like the look of the chart that we have in front of us right now.
Very good. All right. With that, we'll see if you like anything better, and we talk about livestock. Ted Seifried joining us, and we'll be right back looking at live cattle, feeder cattle, and hogs in a minute. Ted Seifried joining us here, and once again, Zaner Ag. You and I met, gosh, many years ago. You came to the studio. I don't know if you've come back since, but you're always welcome if you get into the Nashville area.
Yeah, I'm going to try to make that trip real soon. I say it every year, but this is the year. I'll still be coming down there. It's
very good. Well, hope things are good at doing well at Zaner, and we appreciate your input there from the company. Let's take a look at live cattle futures here and get to business. Folks tuning in or watching want to know what that market's doing. Well, April is still on the board, down 40. June cattle down 20. Not much action there. Kind of a flat trade. August up 12. Over on the feeder cattle, and then we'll get your comments here overall. Feeder cattle are higher. April up 82. May up $1 right now, and let's see how close that is to. Not as close. They were over 242.37 at their high today. 241.27 right now, but still up $1. And then the lean hog complex here. We have hogs lower. May down 90, and the June down over $1.25 here. Let's talk cattle. First of all, Ted, what do you make of that up arrows here in the cattle and feeder cattle?
Yeah, absolutely. So, we did have export sales for the livestock today as well. It was a really non-event for the beef, although the pork number was really quite good, but the beef number was just whatever. So I don't think that's having an effect on today. We are trying to follow through to the upside on the previous 4 days that we've had higher trade, but we're running right into our very key resistance levels in the form of the 20-day moving average in both August live cattle and August feeders. And this is the level that we have to break through to prove that this isn't just a bear market bounce and that we put in a near-term low. So today I think means a lot, and I like the idea that we're still kind of leaning towards the higher side of trade in the higher volume months. So I'm hoping that we can close up near our highs or maybe extend on that. But if we can't, it has to be a bit of a red flag for producers that, okay, this was a bounce off the low, but next order of business might be to go and test those lows again. As far as hogs are concerned, again, a little over 47,000 metric tons sold last week. That's a pretty good number for the hogs. Yet we're not really responding to that. We're down a little bit, trying very hard to hold on to our 50-day moving average and not dip into a deeper correction than what we've here in a little bit. But overall fundamentals, I don't think have really changed all that much. I could say the same thing about the cattle complex as well. And I remain fairly positive. I think if we're going to see this bigger inflation that everybody is getting excited about, I don't think you'll see it manifested in the grains as much, but I do think the livestock market are sort of ripe.
And the May down $1, by the way, before we leave you, and all across the board down over $1. Ted, thanks for your time today. Look forward to keeping in touch.